Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Friday the 13th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So let's get you set up here for the trading day ahead. It was a risk-off day here yesterday with volatility surging. Basically what happened on Wednesday, you saw that payroll data come out, a shift in interest rate expectations, pushing out some of those interest rate cuts and removing some of those expectations. Traders then reassessed the Thursday trade, indicating that it's too much risk for many individuals going into this CPI print, so they decided to remove some of that exposure here, and that's where you get that AI scare trade, and traders are bracing for the inflation reading for any kind of clues to what happens next on interest rates. Now, we will have a holiday on Monday with President's Day, and then the Lunar New Year holidays in China and several other Asian markets next week. Looking at some equity insights here, the NASDAQ 100 clocked its fifth day with a loss here greater than 1% over the last 10 days. This is a feat that we haven't seen since the Liberation Day sell-off back in April. Now a 3-day losing streak as well in the S&P 500. You look at equities overnight, slightly softer here, but nothing too alarming. And then you go to the metals markets here with the gold futures. The low of the overnight session, 49.0710. The high of the overnight session, 50.1640. Futures are tacking on about 0.5%. You do have silver futures up about $1.53, up 2%, sitting at 77.28. You'll get the key levels to watch here on the gold and silver market. Gold, that pocket resistance 41 or 51.22 on up to 51.50. You look at the futures, they did pull back to this 49.37 area, which has been some degree of resistance over the past several sessions. We break out to the upside, run into that resistance at 51.22, and then back off to that 49.23 to 49.37. When you do get average true ranges here sitting at about $216 over the last 10 days, you are going to have those overshoots, and it becomes more pocket support, pocket resistance rather than specific numbers. You look at the gold volatility here, declining to 30.23, so it's just below that chop zone where we get back above on the 32 level, but we're well off those highs that were seen on January 30th at 48.68. You look at the silver futures, the low of the overnight session, 73.74.5. The high of the overnight session, 79.09.5, so up about 2%, with the futures last at 77.20. Your next area of resistance is going to be that double top that we saw before breaking out to all-time highs here. And then we've just been in this chop zone with a wide range here between about $93 down to about $67. So quite a wide range here, and it's because of that volatility sitting right at these high levels at 76.82. It is well off the highest level as far as silver volatility, but we're still seeing an average range of about $10.47 a day. So the next area of resistance, really the 82.67 on up to about $84. You look at the ETF flows here where they're selling gold, platinum, palladium, and they're buying silver. We saw gold claw back some of its losses after that sudden sell-off in yesterday's session, with dip buyers snapping up the metal here ahead of this key inflation data. The sell-off on gold was really amplified, and the same thing with silver, with margin calls, algorithmic trading, and some investors with broad holdings just forced to sell commodities to cover some of these margin calls in other markets. We're continuing to see Bitcoin weaken, and that sell-off in the U.S. equity markets had sparked that liquidation. So you look at the ETF flows just rising about 0.1%. The exchange traded funds here, they did cut about 101,000 ounces, and total gold held by ETFs rising 1.1% this year. So gold's up about 14% year to date. You look at the silver ETF flows, no real significant increase yesterday. They added about 1,300 ounces, but year to date ETF flows down about 2.5%. We're unable to eclipse the 2025 levels. You look at the gold silver ratio sitting at 64-1, and you look at stock futures, they are edging a bit lower. We've had 370 S&P 500 companies report so far this season. 3/4 of them have beat the analyst estimates, with nearly a fifth missing. Now, after Wednesday's surprisingly strong jobs report, traders are paring their bets on those interest rate cuts here, and the inflation data look at the screen at 7:30 a.m. Central Time, because you're going to get some movement here. It could be one of these situations where we get the number lower or in line with expectations, and we get the market reversing much of what we had lost yesterday. If we do see a hotter number, we could have a capitulation event where markets sell off, reject, the dip buyers come in, and we start to look forward as when these interest rate cuts could happen. So you will see a shift in interest rate expectations. Markets are only anticipating a 7.9% likelihood that they cut 25 basis points at that March meeting. Pre-payroll, it was about 21.9. You go to the June 17th meeting, about a 63% chance, where it was about a 77% chance prior to that payroll reading. Many of these large banks, they are pushing out to May, June, July as that first interest rate cut. You look at the dollar index sitting at 96.95.5, just ever so slightly higher after its big lower high after peaking on February 5th at 97.87. So that's really the number to watch as far as the dollar index. You got the euro currency sitting at 118.76. You got the Swiss franc back positive again. Swiss franc has been surprisingly strong here recently, as well as the Japanese yen. You look at WTI crude oil futures at 62.35, down about 50 cents. You got VIX futures still elevated over that 20 mark, sitting at 20.99 on the February futures contracts. You got Bitcoin up $1,600 at 67,000, below that resistance level of 72. And then the S&P Gamma exposure is negative. You look over at Europe and Asia, European stocks were steady. Asian stocks, they fell for the first day in 6 as investors, they kind of paired some of their gains and paired some of their positioning ahead of that Lunar New Year holiday in China. And you got the MSCI Asia Pacific Index dropping about 1.5%, but it remains on track for its best week since September 2024, hitting fresh record highs in each of the past 4 trading sessions. So expect some volatility here at 7:30 in these markets. Look out for a lower number here where it could spark a pretty good rally in this market. The dollar index could sell off, in my opinion. You guys got any questions on futures option trading? Shoot an email to info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck. Good
Futures
trading.
trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.